For some reason, my desktop keeps muting me out. It keeps muting me out. We're going to go back and edit these on the play, but yeah, it keeps muting me out. I'm not sure why it is doing that. Hopefully it will not do it to me again. So let's go ahead and go through this quickly. I apologize for that. I'm not sure why that's happening. I wish there was a way I could keep it up so I could keep an eye on it, see if it mutes me out again. What we're doing here now is we're looking at, again, the 10 and the 20 EMA, and we're looking at crossovers to be able to do trades on. Now, what's very important on a crossover, let me just pause this here for a second. So you see this crossover happening right here. What's very important on crossovers is when they cross, you want to go ahead and make sure that cross is somewhat significant. And so at this point, we're starting to get some larger candles, and that's an indication that the crossover is starting to gain momentum in a direction as the size of the candle. So this candle here is starting to build momentum to the downside. And one of the things we're looking at is how the 10 crosses, how the 21 crosses over the 10 EMA. And so this is telling us that there may be an opportunity to go short here. If we did decide to go short, it's very easy to know where our stop is, and our stop is right here. So we're really looking at a 10 to 15 pip stop. We don't want to put much more into this because we don't know right now if this is a range or if it's actually a momentum move getting ready to set up. So if we went ahead and we put in a sell here, and then we would use this as a stop. Now, again, this doesn't have a stop mechanism on it, so I'm just going to have to take it off, whatever the candle closes. But we'll pretend here. We're pretending. So let's see how this works. Okay, one of the things I want to show you is you can see, and let me blow this up here a little bit. You can see how this space between the EMAs is it's getting larger and larger, but there's still a lot of ranging here in these candles. So really hard to determine which direction it's going to go, but we're going to watch this. Okay, so we have our first strong down move. Now we're getting strong candles in each direction. So we need to understand that this is really what we're seeing here is a range. We're not really seeing a trend yet, just a range. So we need to be very careful on these. So even at this point, I'm going to take one of these off just because it looks like we're in some type of a range, not a strong trend move, but a range. Okay, now the trend is it's identifying itself. It's really starting to push down. And so if we look at our entry versus where we're at here now, we have reached a total of 15 pips. Okay, so we're almost at that 20 pip threshold. You can decide to take your trade off here or continue on to the 20 pip. And there's that 20 pip threshold. So if we take our measurement here and we bring it down here, we've reached that 20 pip threshold, just a little over it. So we can actually take profit here on that trade, and we can wait for the next trade setup. We have no idea how far this is going to go down, but so far the trend seems intact, but we're coming down here to support. Okay, there's the change. Now we see it's crossing back over, strong candles pushing the upside, but still not a direct change in trend yet. Getting close now. Okay, so these did not cross. So the EMAs did not cross over right here. If we were still in our trade, the one thing we'd want to see if we were going to exit that, the sure sign would be a crossover in the EMAs there. And we did not get that. So if we were still in that trade, we could have caught this move here if we were in it for a longer term. Now, a lot of people ask me, can you enter in on these? And the answer to your question is yes. Where you would enter in at is you would take the risk here and your stop would be above this 21 EMA in this case. Vice versa, it'd be above the 10 EMA. So right here, this would be where you put your trade on and take risk. But the stop out, if you measure a stop out, it's relatively small. And that one, and that's 7 pips. You could stretch that to 10 pips without any problem. And that would probably be the extent of your trade there, right down at that level there. That's going to run you about entry point. It's going to run you about 10 to 18 pips there. All right, this continues to be, these EMAs continue to be spread apart. So again, you can continue to stay in the trade. If you were in it back up here at our original spot, right there, I wouldn't. That entry right there. All right, now this is interesting. We want to watch this right here, what happens here. So the EMAs are still apart, but you're seeing we're hitting a bottom here. And we're going to see if they want to begin to look at crossing back over. So far, they have not said they want to. So it may break to the downside again. Okay. Moving this along as fast as we can here. All right. So here's an interesting thing. All right. Let's look at these. You see how it crossed over here. And we had a pushback and a pullback, and it held on that 10 EMA. And again, the pullback held on the 10 EMA. This is a spot where we want to look at taking a trade, because the risk now, where is it? It's just below this 21 moving average. So if we put our stop right here, and this is what I'm talking about, putting our stops at I mean, if we enter right here, right now, we're looking about just over 10 pips on the stop. Well, not even that, about 7 pips on the stop. You can't beat that. So we go ahead and we put in our buys and we see if we are going to have a trend change here. Okay, now let's look at this. So we started up, we came back and we retested this 21. What does that tell us about our trade? Well, it tells us that we're getting a little bit of weakness here. We could be going into a range, but not sure yet. What would make it so that that was not going to work? If we came back down, broke, and these crossed over, we came back down, hit our stop, or these crossed back over, that would change the whole dynamics of this trade, and we couldn't stay in it any longer. That's what's telling us don't stay in the trade. Okay, so we see at this point it pushed up, but it came back down and it stopped us out at our stop. Okay, so this is still holding in this. We have a support zone right there. That's still holding there. 7 pip loss. It's telling us right now that this is in a range and it's not ready to make its move. Okay, so when we're trading something like this, we want to go ahead and we want to just let it do its due. Let's go ahead and take that trade out, because we want the trade to work itself out. You see how these EMAs are tightened up. You don't want to be in that section right now. You want to stay neutral on this, and you want to see some real change in those EMAs. Let's go ahead and speed this up even more so we can see where that's going to happen. Okay, so once again, these EMAs have spread apart and it's on a downhill move. Okay, so this is heading down now. If we wanted to, I would not get involved in that until a break. This candle right here, a break solid of that support zone and a large width on the EMAs, you could enter there with a stop right above your 10. So you would have an entry that would be here, and you would have a stop that would be, you could put it even higher. I mean, you could put it right here if you wanted to, but I wouldn't put it much higher than that. You really don't need to. This is going to go, if it's breaking, it's going to go, and you don't have to worry about it. It's going to go. So I would have put my stop in right there, right? So if we go back and look at this, how that works, I know that all went fast, so we need to look at that carefully, and let's slow it down here. If you go down, and here's the support. Okay, you have a break, solid, closed candle below support, but these aren't really stretched out much yet. So I would, since that's a range still, I would wait for that. All right, now there's a really good look. You have both curving over. You have a nice split there. This would be a great place to put a trade in. So you'd put your trade in right here. And then your stop could be right above this right there. So that gives you about a, let's see what size stop that is. That's going to give you about 14. That's a little large. I might go a little bit smaller than that. I might make that a 10 pip stop. So I would make that a 10 pip stop. And then if you did, we'll just act like we're putting in a trade here. Then you would go ahead and look for those. I don't like putting trades in. You really can't see the EMAs. So I may go back and redo that, but they're splitting. That's what you want. It's retested that pullback. That's what you want. Retested, pulling back still. That's what you want. Retested, pulling back, continues to show downside pressure. Pull back. Let's see if it continues to roll over. Pull back above. Okay, let's look at this now. Okay, went up to the one right there. Okay, now it's looking like, okay, we still have downside pressure, downside pressure, downside pressure. At this point, you could obviously take some of this off. Let's go ahead and in fact, let's see. Yeah, we could take that off. We just need to be aware that this is set to break even now. And let's see if we get more downside pressure. Really, there you go. Downside pressure, still good, still good. Okay, there's a really big change right there. Okay, so a candle like this is strong. That's a strong body. You see it pushed right up through the 10 and it went up in near the 21. And so what we want to do here at this point, I'm going to take my profits off there. Now it may roll back over, but for safety, I want to keep my profits. You see it push through there. Now it's getting to look, I don't want to be in this anymore. Definitely don't want to be in this anymore. All right. So now we're looking to see if there's a crossover here. Okay. Again, it looks like it may be in a range. Not ready yet. Not ready yet. Candle's still pushing to the downside. We haven't crossed yet. So nothing here yet. Change directions. When we push above here, I don't like making a trade on that. Like here, where we hit the top and we roll over, where you possibly could do a trade there, that's fine. When we push above like that and it goes flat, I'm not interested. I'm looking more so for a reversal. Okay, it's looking more bearish now, but really not a place for me to enter a trade. Too far into the tooth on this, so we don't want to do a trade here. Let me make sure. Yeah, I'm still off mute. Good. Well, let's speed this up now. We can speed this up. Okay, so far we're not getting involved in this. It is still pressure to the downside, but we were out of the trade. Not really a good place to enter. Still downside pressure. Nice long trade. really is. So this really has gotten to be, but we really didn't have a place to enter. When you have something like this, it didn't cross over, but this is really hard to enter in on something like this. So you kind of just have to let it go. And we're looking for the reversal. Okay, we're hitting a bottom here. Did not cross, still has more to go. And one of the things you want to understand is once a large down move like this happens, that you could probably take a trade on there. Once a large down move happens like this, you want to stay neutral for a little bit. Sometimes it immediately reverses, but generally it goes into a range. So on this right here, you go sideways on, and you see how now the 10 is moving up and the 21 is flattening out. That tells you there's a pause in the move here. And now you're looking for a change in direction. So you see how I didn't enter in on that cross, because generally after a large move, you're going to have some ranging. And what I want to do is I want to see how this works as it ranges. Make sure we've got that downside move finished up. It may not be done yet. So what I'm looking for is I'm looking for a sustained crossover here. This is still in the downside move. Let's move this up a little bit more. Speed it up here. Okay, one of the things that you notice now is these are starting to really squeeze together. All right, that's telling you that the downside move is once again tapering off. We need to be cautious here. Nothing there. You see how they're just moving in and out, small spaces. We know where we're at in the trade. There's a drop. So let's go ahead. Now we're looking at a pretty good size reversal here. Whenever you get a strong drop like that, you want to look for a reversal. Now let's just see if we get the crossovers. Okay, so there's our crossover right there. And we've got nice bullish candles. This looks like it will be a good trade. So I'm going to buy this. With this size of a drop, it looks like it could have some sustainability. So I think I'll go ahead and put on another buy position. And this is what we're looking for here. Okay, so this is still ranging. Okay, at this point, I'm going to take off one of my positions. So I'm going to do a sell. I'm going to take off one of my positions, because right now I am setting at this point here. I'm setting about 28 pips. So it's just moving a little faster. I would have taken off sooner than that, but let's go ahead and just work this out. The trend is still up. You see how it is staying above and still pushing higher, even after it goes into its range. Okay, so we went up. I would have hit another one. I've got this moving pretty fast, but I would have hit another one. But if not, if I missed that, I would have had it here. But now we're coming back to touch this. I'm going to take off another one. And then we'll just watch this to see if it continues on. We've got enough space here to keep track of it. It's going. Okay, so now we see we have a crossover right here. So now we're starting to switch directions. So I would have taken it off a little bit about right here before this drop. But we want to go ahead and take off that next position. And then it crosses back over, so we can look to get involved in it again. This is kind of, I know this was kind of long and drawn out, but I like taking you through and showing you what it's like in real or close to real time. Obviously, not everything is perfect, because you can't put your stops in, you can't manage a trade that great with replay, but you can get the visualization of what to look for when you're using an indicator, when you're using moving averages. I know people that just use the 200 moving average, very successful traders. This is just one of the ways that you can do your trading. I'm not saying that this is the only way, this is the best way. It's one of the ways that could work for you to do your trading with. Now back to what I was talking before, because before I was being stupid on mute and you couldn't hear anything I was saying. In here, in 7X, one of the most important things to us is you as the individual. And you're important to us because each individual that comes through our door into one of our programs is different. They see things differently. Most of them learn differently. And we have to work with them to be able to find out where their strengths are and where their weaknesses are. And so we take time with you as your mentor when you come into the program, one of our programs, whether it's mine, whether it's Dan Kelly's, or whether it's Sean's, we take time to learn about you. We want to know where you're having problems at, where we see your weaknesses at, because that's the most important thing. When we focus on the weakness and correcting those, you get to have lots of successes. We want to define what your habits are that are causing you to have those weaknesses, what your mindset is. And then we want to begin on the process of teaching you about risk first. Now, a lot of people teach what you can make, how much you can make in a trade and so forth. And that's not really where we want to start with you at. We want to teach you how to preserve your capital. And that is one of the most important things in trading. Because if you can learn how to preserve your capital, then when trading days are good, you can make a lot. And you have still capital to do it with. When trading days are bad, you can conserve your capital by making small losses versus large losses. So what I was talking about before is kind of a condition where sometimes when we begin to grow our account in trading, we begin to put on more risk. We begin to put on more leverage. And that's what I was talking about before. So example, if I'm trading $100,000 account, maybe I only want to risk 2% of that. Maybe I will say I'm only going to risk $2,000 of that $100,000 account. And then I design my risk profile around that $2,000. That way, if I lose anything, if I lose that entire amount, I've only lost 2% of my main trading account. So a lot of traders that are, seven-figure traders, we usually like to work around a $50,000 to $75,000 account when we're just general trading. Now, if we see a setup where we call hitting a home run, yeah, we're going to leverage a little bit more. We're going to put on a little bit more on the account or something like that. But generally speaking, markets trade in ranges. And so you're going to manage your account for range trading. On the larger time frames, you can really see the breakout coming. And that's when you can hit a home run. You can set things up to really stay in the trade longer through the small pullbacks and the continuation of down. You can stay in the trades longer and you can push it further. You can push the leverage a little bit further. But we do have our limits. I'm not going to get into that. But what I want to say here tonight is that it's real important that as you grow your account, say you get your account up to 10,000, don't go out there and risk 20% of it. That's a $2,000 loss. How are you going to be mentally when you lose $2,000 of a $10,000 account? It's going to mess you up. Whereas if you lose 2%, which is $200, you're going to function a lot better. So you're going to be trading for that $200 risk versus a higher risk of 20% and that $2,000. So you know that if you lose that $200, that is time to say, okay, time for me to take a break, get my head straight, come back to the drawing table, see if I can hit it better the next day, and come back in, you've only lost $200. Now you come back in with another $200. And then you say, okay, can I go ahead and hit it again today? So you're a little bit over 2%, but you're still got that 200 you can trade with. Then you come in, you do a trade, you get the 200 back, you do another trade, you make another 200. Guess what? You're in good shape. Better trading day. Maybe it was a chop day yesterday and you just couldn't get it right. But today is a little bit, the chop's broken out, you're trending a little bit, you get on that trade, you work it, make more money. So that is really the importance of managing your risk. You always want to manage a trade from the standpoint of your stop. And that means what you could lose. The next part of trading is what you can win. You want to make sure that that stop is, let's say here, we put 10 pips as a stop. You want to make sure that your win at least double that stop. So 20 pips, my final place for the win. And that's what you want to do. And one of the ways we layer out of risk is, like I said, we do 10 pips, then we do the 20 pips, and we take the remaining part of the trade, as I showed you here. And that's the way we manage our risk, okay? Now, you may have a different way of taking profit and so forth, and that's fine. If you can stay in a trade for a long time, that's fine. You have the ability to do that. And you pull that risk at the top of the move, when it gets to the top of the move and the turnover is happening, that's great. You made a long move and you got a lot of capital from that move. The idea is eventually to get our traders where they can do that, where they're taking very small risks, but having huge returns. And we have mechanisms to help you learn how to do that and to be able to do that. And we can teach you how to do that over time. But the first thing we want to do is make sure our people are trained on the risk side so that you always protect your capital as the most important thing. And then we train you on the gain side, meaning short-term gains, long-term gains, small losses, but you need to get the loss side down first. Then once you got that mindset in, once you got that habit in, it's not a hard thing. Trading becomes so much more easy. It becomes so much more relaxing because now you're not taking huge risk. You're taking small risk, big gains. And that's really what you want. That's really what you want, especially in a market like we're trading now going forward. This is going to get very dicey. We're going to see a lot of interesting things coming up here. We have a possibility of a global war happening on our hands. That's going to create volatility in markets like we've never seen before. This is the first time where we have a major global coalition happening, where we have, Russia, China, the Middle East countries against the United States, Israel, the Western countries. It's really forming up to be that way. We've never been in environments like this. We've never been in an environment where the Federal Reserve has raised over, 500 basis points in just less than a year or in a year's time. I mean, there are a lot of things that we've never seen before in markets. We've never seen a bond crash like we've just experienced. So a lot of things are happening, and you're really going to have to be on top of your trading being in these markets. And that's one of the things that we really help you through. And that's why it's so important to get your risk down. Just to give you a little rundown on some of the things we offer here, you can become a 7X member, and it's very simple. You just go in and hit join free and create an account. Now, I'm already a member, so I'm just logging in here. And you can go ahead, and once you get in here, the first thing you want to do is you want to become part of our community. You're going to hit start here. And what that's going to do is that's going to take you through a series of videos through the sign up process and being able to join our community. And so once you get in and do all that and you join the community, then you're going to have access to some of the important areas in the 7X investors area. This is all the free area right here. These in the light blue, weekly look aheads, live trainings. What the weekly look ahead is just where I show you what I think is going to happen in the coming week. Live training schedule, that's what we're doing here right now. And then the recorded trainings, where you can ask questions here. This is where people share their wins, and this is chat. So if you just want to find someone in the group, you chat back and forth with about ideas and so forth, you can do it right here. All that's included in the free membership. And you have access to us as well. Myself, Dan, Sean, we can all come in here and ask questions if no one in the group can. And not ask questions, but answer questions. And then the next thing is platform navigation that helps you through the platform. There's some announcements made there, like updates about the platform. And then you come down here, you see our partner program. You can join that. That's where you can go in and you can get, eventually you'll be able to get training on how to advertise 7X, and you'll be able to get paid for it. So anyone that comes into one of our paid mentorship programs, which I'm going to go through next, you will get, as a person bringing them in, you will be able to get 35% of the monthly fee. And so that's pretty generous, pretty significant. And bringing three people can pay for a monthly mentorship. So you're going to get 35% of that. We're also going to eventually have a plug and play where you can go in there and do your advertising. We'll show you how to do it. You can set it up, run it, and really bring a good amount of people in. We would rather pay you to do our advertising than pay an advertising service to do it. So we're getting this built out for that purpose, and where you can become an affiliate for 7X investors. Next, we have our programs. We have Alpha Trader, 7X Futures, and London Breakout. I'm just going to start with each one of these. Alpha Trader. Alpha Trader is about trading Forex and CFDs. I instruct in that, and Ty is the other instructor. We teach people how to develop a mindset for trading. We also teach you how to trade live, trade currencies and CFDs live. So you can actually see how we're setting up the trades and taking them. Next, 7X Futures, that's taught by Dan Kelly. He trades in the futures market. So his trades are day trades. He does a day trade system, which help you gain returns. Almost every day, people gain returns in there. So really a great place to be if you want to learn to trade futures. He has a morning class every morning from Monday through Friday, and it goes from 5:30 to 8:30. And you can go in there and learn how to trade futures right along with them. You see his trades, just like in Alpha Trader. You see us placing our trades. You see some of the frustration we may go through. You see the success we go through. And our idea is to get out of those rooms with a profitable account. We also, in each one of those, I forgot to mention, is we also in Alpha Trade, we have what's called a Mind for Trading. It's where we just sit down with you 2 times a week. And we teach you how to develop your mind and habits for trading. We give you specific exercises to do to develop that with. We also trade with you 4 nights out of the week in Asia session. And then Dan also in his group, he has what's called the pit is his live training, but he also does the mastery class, where he'll sit down with you and he'll give you specifics, what to look for, kind of like what we did tonight in the markets to be able to learn how to trade. London Breakout. Sean's class is a little different. It's more of a single, what he'll do is he'll come in and he'll give you a single signal for that night. It's for the pound dollar or a pound pair. And you go in and you set that up, and that's it. And the next day, it'll either be a win or a loss. And so it's really convenient, really simple. Obviously, you're going to have more wins than losses, but that enables you to go in, and those who don't have much time, build an account slowly and build it up until you're getting ready to come into one of the other mastery classes. So a great place for those who don't have a lot of time that they can go into and take advantage of. The mentorship for Alpha Trader is $249 a month. We also have a yearly, where you can pay for a yearly membership. I think it's a 20% discount. And then futures, again, is $249 a month. Again, yearly mentorships at a 20% discount. So those are the costs. And then the London Breakout is $89 a month. So those are the costs of the service of the mentorship services we offer. I hope this has been helpful for you tonight, giving you a little idea on ways that you can trade and what you can do to become a profitable trader in the markets. Again, trading is something that takes some time to learn. And the learning part is developing the habits. The actual trading is not that hard. It's developing the habits to trade it. Meaning, when I see something that's not right, I need to get out. Probably the hardest thing for people to do, get out of a trade that's not really performing well. And then staying in something when I see it's performing great. When there's a trend developing and being able to stay in it, that's something you can learn to do as well, and we teach. So with that being said, I hope this has given you enough information. I'm sorry about the glitches tonight in the meeting. I hope I'm not on mute. Let me see here. No, I'm not. Okay. We will get those, I'll get those ironed out. We won't have a problem in the future. But I hope this has helped you tonight, has given you a basic understanding of maybe a way you can begin to learn to trade in the market, give you some more information to trade with. I hope you have a great week. I wish you the best of success. And if someone has invited you here tonight, get with that person, sign up with them, and come in and join us. Get a mentor, get this show on the road, be successful. Things are going to change in the next few years. People are going to need income, not just from their jobs, but from other sources. This is one of the ways you can learn to do that. So take care. I hope everything goes well for you in the future in your trading. I hope you join us. I hope to see you in one of our classes, and we become good friends, and we have great success together.